Hello and welcome to this new session, which is altogether different from my earlier two sessions. Today, we're going to discuss about the portfolio management and various investment avenues available for the retail investors. So this video gonna be very insightful for you, and at the end, we will discuss what are the various tax saving tools and techniques where you can save your maximum taxes, and that is even without liquidating your existing portfolio. So don't forget to keep watching this video till the end. So when we see the whatever the investments avenues available in the market today for the retail investors, first we start with the equity investment. Everybody knows the equity investments you can buy through the stock exchanges, but I preferably suggest to everyone that when you wanted to be a long-term investor and you want to create a wealth for the equity investment, then choose the route for mutual funds, because the equity investment is okay when you do the trading, like you purchase today and keep the your investment till maybe let's say 15 days or 20 days, and when you get the good profits you can exit out from your investment. That is okay with equity investment. But for the wealth perspective, that's a mutual fund can be the best investment avenue for you. But as you know, that's this investment comes with the risk. The persons, the investor who wanted to be take a higher risk with the high return can go with the equity investment either through mutual fund or directly through stock exchanges. Second investment option available is the fixed income investments, that you can use the bonds, your fixed deposits, and even now you can purchase treasury bills from online portal of RBI Retail Direct investment options that will fetch, I think, as of now, a 6.6% yield on 91 days of T-bills. This return comes with the lower but steady return with lower risk. So mostly, while the equity investment preferred by the young generations who has the age bracket between let's say 25, 30, 40 years, the fixed investment is preferred by the investor who are above 55, 60 year age, and they wanted to be generate a regular and steady return for their retirement planning or other things. So since this is comes with the lower risk, this is the best investor for higher bracket age bracket investors. So this is bonds. When we talk about the bonds, I will give you the insight about this each investment also the next slide. So don't worry. Now comes to real estate. Everybody knows about the real estate. So as of now, you can buy real estate through a physical form, but the ticket size of the real estate is much higher as compared to the other investment opportunities. When you go for buy any commercial or residential property, size can be more than 50 lakh rupees. So practically everybody cannot afford buy a physical real estate investment. So that now the available option is you can invest through REITs, real estate investment trusts. These are floated by portfolio managers and companies like Embassy REITs, Blackstone. So they have you know generate small investment from the investor and invest in the real estate, and also generate a rental income and capital appreciation. So this is again give you a steady return over longer run and potential rental income also when you buy a physical assets almost. This is again a good investment against the inflation risk, because but when you compare the real estate investment to equity, it's approximately half of the return, where the real estate is give you approximately average return of 7 to 8% over longer period. more than 20 or 30 years. Equity can give you 15% returns on longer run. So for long-term wealth creation, equity always be able. Another investment option is commodity. This is popular within the ladies because ladies is generally fond of the jewelry, so they don't know this is a form of investment also. But since they are always looking to buy a new jewelry, so this is converted in investments. And gold is also give you return approximately 10 to 11% over 30-year period of time. But this is, you can buy through stock exchange like uh, mutual funds route also. You can buy through ETF also, and these investment also give you good protection against inflation. Now crude is also available, but this is more or less hedging perspective, or it's a speculation kind of thing. So I never recommended to investment in the crude, these kind of commodities. But other than this, you can invest in gold and silver. That is okay. This investment, we are not talk more much about this investment today, but it is also an alternative investment whereby the people are, invest through the hedge fund, private equity, and they generate comparably higher risk with a higher return perspective. But we are not going to talk about this investment. Now, I will give you the brief about what are the options available as of now where you can invest. It is detail, each individual investments. Like when you talk about the investments, these the blue chip companies, the low, large cap, mid cap, small cap, these are the companies. And when you wanted to invest in unlisted company, that is also available. Mostly the company when they are um, going into the public, before that they are available in the market. So if anyone wanted to purchase this share, that is also available. And now you can invest in the foreign stock exchange. That this is investment you can do through the mutual fund routes, where you can buy the US like index funds of Nasdaq, Dow Jones, Hang Seng. So whatever investment you would prefer, you can go with the mutual fund route. And this is the best form mutual fund for the equity investment. I would suggest. Longer run, this is the best thing you can do. This comes with the hybrid fund also. This comes with the pure equity fund. This comes with the traditional investment value funds, and then if you want to go with the arbitrage fund also, so this is the best option I would suggest. And exchange traded fund, these are basically a passive investment whereby there is no specific fund manager who can involve in this. This is peer with the index like Nifty index fund, Sensex index fund. So these funds can give you the return up to maximum up to return of the particular fund is provided. So this is a mirror of index. This index fund. When you come to the fixed income, you know about the fixed deposits is available, recurring deposit is available. Then investment in insurance is also endowment policies give you a fixed maturity. That is also you can consider with the. But I would suggest if you wanted this investment for your life protection, then go for the term plan, and invest your corpus into the mutual fund. So you will get both the benefit, life cover plus uh, your capital appreciation. And public provident fund, apart from the employee, EPF, public provident Sukanya Samriddhi Yojana, government floated scheme, senior citizen saving scheme, post office income scheme, recurring deposits, company fixed deposit is also available. That goes up to 12% of return. Many company can give you 12% of returns, especially the NBFCs also is there. And debenture, this is a popular investment I would prefer always, because most of the people prefer to invest their corporates into the fixed deposit. But there are the alternate option that is called bond and debentures. If you want to purchase a government bond or government undertaking bond, you can get a return of 12% to 14% also. Some bond is available with the state guarantee also. which can give you without risk investment. And finally is the debt mutual fund. It is popular investment options where the people are preferring investment in mutual fund route, and they tend to invest in the different kind of corporate bonds, government bonds, and government securities also. This is one of the popular investment. Real estate investments options available direct, as I already discussed, residential commercial property, where ticket size is higher side, but you can choose if you in position to afford these kind of uh, ticket size. Otherwise, real estate mutual fund you can prefer. REITs is also available. InvITs. These InvITs are basically the infrastructure related investments. So this is again a popular kind of form whereby person can generate a steady and regular income. Finally, the commodity where you can invest in gold, silver, gold fund through mutual fund route, and ETF is also available. So these are the kind of difference which I give a complete detail what are the investments opportunity available in the market. Now let's move on the interesting part that you are waiting for, that how can you save your taxes on the returns. This is the complete insight what is the and this is after implementation of budget 2024. Before that there was the different taxation, but now it changed. What are the new things in new budgets? Indexation benefit is removed. Now indexation no more available, except in case of real estate where the investment they have given option where property is bought before 23rd 7 24. You can take indexation benefit with 20% tax. Otherwise, the holding period government is reduced for long term 3 to 2 year. So in equity fund, short term is increased from 3 to 20%. Long term is 20 to come down 12.5% without indexation. And this 1.25 lakh is very important for you. How? I will let you know. Fixed income, mostly they are come under with your income tax slab. If you are higher bracket, you will end up with paying higher taxes on that. Real estate, after 2 year, you can pay lower tax of 12.5%. Holding period is more than 2 year because that is reduced from erstwhile 3 year to 2 year in this budget. And in the rental case, you can get 30% extended maintenance deduction for the rental income of real estate investment. Physical gold's case, it's a general, but just as compared to last year, tax reduced from 20 to 12.5%. With holding period, it's more than 2 year, and then uh, no indexation benefit is available now. Now I will tell you that how you can save the taxes. See that generally you know that 1.2 lakh government is giving benefit every year, and I assume that most of the investor who invested 2 3 year backs they generated some sort of capital gain. 2.3 lakh is available for long term equity fund also, either from mutual fund or through direct equity investment. So first of all, I will suggest everyone that every year at least you sold that much of equity mutual fund that can fetch 1.2 lakh as a return, because that is tax free. So you can generate that return, and you are not supposed to pay any tax on that. And at the same time, when you know liquidating that investment, you buy these investment again. Either you can buy on the same day, because once you sold the investment, that is comes as a booked profit. So your profit is booked, and you again invest that amount. So there is no, you are not losing any kind of your investment corpus, and you back back to again your investments, whatever you prefer. So this is best part. Generally people invested 10 year 15-year back and they are not booking any kind of profits. That means every year they are losing 1.25 lakh, 1.25 lakh rupees. That is substantial amount for investor. You can you can get this amount every year with back to again invested same amount. I think you got my point. This is the first thing you can save your taxes. Every year booking 1.2 lakh of return on your investment, that is either equity mutual fund or either equity shares. Second point I wanted to know you is that at the end of the year, that you have some sort of maybe a loss, that is called capital loss, because mostly in mutual funds maybe there is no loss, but when you invest or direct equity, then there might be you bought some share which are giving some sort of losses to you. So I would suggest you to book this loss on 30 before 31st March every year, and this loss will compensate it with your income on that particular year. So you will end up with the paying lower taxes on your total income. And as the same case as you are in this case you are doing, you are investing back that whatever portfolio liquidated for booking this 1.2 like. In the same way you again invest this loss generating shares. You sold the same day, again invest on the same day, but this loss is compensated against your profit, and you overall you end up paying lower taxes. This is the best part you can do, how to save the taxes. There are multiple ways where you can save the taxes, but I think if I continue with this video, this will be the longer. So if you like this video, encourage this video, I come up with many interesting video that will definitely give you gain in terms of saving, in terms of investment. And finally I tell you that you would be surprised that on the last video I was talking about astrology and why I just jump onto the financial, this investment and portfolio kind of thing. So I will tell you that I am a finance expert basically, but my passion is astrology. That is why I started my first video with the astrology. So I will give you different kind of videos including finance, taxation, laws, everything. Keep watching and thank you very much.